But also, don't just hoard the money, because one thing that you can also overspend on is time, which is also deadly for a startup. It's like I've seen also other people take the advice in the other extreme and basically hoard the cash so that they have an infinite runway or whatever. If you hoard time too much, like inevitably in startups, things change. You lose your window, competitors catch up to you. It's like time is also something that you should not hoard because as a startup, you just don't have it.
I'm Brandon Reed, and you're listening to Ready, Set, Startup, a podcast that brings you industry-tested perspectives from leaders working in all areas of the startup lifecycle, so you can learn from the wisdom that they've gained over years in their fields of expertise and apply it in your own entrepreneurial journeys. Let's get into it. On today's show, I'm talking with James Wang, general partner at Creative Ventures. James likes to say he stumbled into VC investing years ago after some friends asked him to offer his expertise while they got their firm off the ground. He'd spent years up to that point gaining industry knowledge in the then nascent but promising space of artificial intelligence. And he put that experience to use, identifying and investing in companies building innovative solutions in AI and other deep tech fields. In our interview, we cover a ton of topics, ranging from how founders should comprehensively frame up their solutions while pitching to investors, to the impact of AI and his views on where it's headed. There's a ton to sink your teeth into with the perspectives that James shares. No matter where you're positioned in the startup world, there's something here for everyone. We start our discussion with James's path to venture capital after years at Bridgewater, Google, and his own startups. As is the case most of the time, it wasn't a straight line, and he shares what he learned along the way.
I came back to the Bay Area mainly because I was really interested in what's going on with compute, with AI, with all these different things. So when I got back, I was doing my MBA at Berkeley, got involved with a lot of the different 3D printing and drone startups at the time, most of which are all gone, though they were well known at the time.
Around what year was that?
That was around 2013 timeframe. So it was when a lot of the maker revolution and everything was going on. And I got pretty involved in the Berkeley, Stanford ecosystems, kind of dabbled around, but also founded my own startup with my now wife. She basically had come from the East Coast with me. We'd been together for I'm not sure how long we'd been together at that point, but we're getting close-ish to 16, 17 years or whatever together totally. But anyway, co-founded a startup with her and another engineer from Amazon.
And you're still together.
Yeah,
that's great.
We're still together. And yeah, that was Lioness, which was in women's health more broadly. That also had actually AI elements and stuff early on. We didn't call it that back then because AI wasn't in vogue. But anyway, that was some of that. And I got kind of dragged into VC because some classmates of mine from the MBA wanted to do it. I told them it was a bad idea, but they went off and did it anyway, and then came back and said, "Hey, you were kind of right. It is actually kind of hard and stuff. Can you help us?" And it's like, "Oh, you're taking so much of your time. You should be, an advisor and then a part-time partner and then full-time partner." And it's kind of the trickling, reeling me in from there. So kind of a reluctant VC in a way.
I know, I hear that. So, what did they pull you in for? Was it for that AI expertise through some of the other companies you've been involved with?
It's both the connection to a lot of the startup ecosystems because VC is very much a people business. But the other thing too is that VC, if you actually do it right, you do have to think about a lot of the criteria for how you actually do investing, how you actually think about a lot of these different things. How do you sort through the tons and tons of different startups that are pitching you for financing? How do you think about what will succeed? How do you think about what will fail? How do you build a portfolio? Because some things are going to fail, right? So it's all of those financial investor kinds of things, which I definitely had from some of my previous days at Bridgewater and whatnot. So there was a lot of those pieces, essentially.
And so, I mean, your bio, things that I've been researching from you online in our previous conversations, you kind of say that you are in the deep tech space. Talk to me about what that means. That sounds very amorphous. What does deep tech mean? Define that for me.
Yeah, totally. And I hated that term at the start, though. It became more and more ingrained. So then there's nothing you can do about it once it becomes the the way that everyone describes it. For us, deep tech really is a lot of the things around fundamental science, fundamental developments on frontier technologies. So that for us is a lot of AI, robotics, synthetic biology, advanced materials. And typically speaking, we specialize in the stuff, especially that it's like, if you actually get this thing working and to market, you kind of win. So a lot of our companies tend to have 0, 0, 0, 0. And then for one of them, they basically started signing individual deals worth $1 billion each, like after they actually got off the ground and launched. So it's that kind of company. It's stuff like geopolymer, cement. It's stuff like AI drug discovery, AI diagnostics, things of that nature, not just sort of a SaaS company.
Okay, great. So it's the foundational tech underneath maybe the companies and products that are built on top of them.
Yeah, I think that's a good way of describing it.
Okay. So what about your background and expertise? You mentioned that you had been a part of some investing even before you started doing VC. I mean, what helped you? What gives you the unique expertise you need in a niche that is specific as that?
I think what it is both having the right technical background. So myself, I had a decent amount of technical background even before this and some of the different machine learning and other things, though.
Okay.
I did come up the curve more. So if we talk about that more later, I'd say if you want to jump into something, it's never too late, but that's a separate discussion. But the other thing as well is basically having the wherewithal to dive into a lot of these areas that typically aren't as popular. So at this point, we have been doing this longer than a lot of different folks. But when we started, though, we were among the few people actually exploring the area because at the time, a lot of other areas in investing were still much more popular, like whether it was crypto at the time, blockchain, Web3, et cetera, and then onto like more SaaS businesses again. Like this kind of deep tech has been out of style pretty much since like the 1980s and some of the like early days of VC. So we were some of the first to it. And a lot of that, you start to gain momentum in the network and understanding how to invest in it.
What do you mean by that, out of style? Like, how does that manifest itself? Why did that happen?
Yeah, so I mean, the early days and why Silicon Valley is called Silicon Valley, right, is that, you had Fairchild Semiconductor, Intel, blah, blah, blah. Like, you had a lot of these semiconductor technologies that take quite a bit of investment up front, but once they win, they kind of get like going and win, right? Like once they get scale, technology, get it out to the world. That started fading a lot since like both the internet and the post-internet era in terms of after the dot-com bust. Like a lot of these software companies where the beauty was not only is it low marginal cost after you get to scale, it's actually very low cost to build. So these were the software startups where it's like, okay, I just need to build an app. I just need to build a web thing. And as a whole, the relative cost to go do that is very, very low. That became the most popular investing style within VC for obvious reasons in terms of capital efficiency. And that pretty much dominated the space for the span of something like 20 years. So many of the partners who used to have expertise in knowing how to deal with these hard technologies, assessing science risk, how to manage cash and these other things for something that won't have revenue for years, that a lot of that all went away with some of that changing of the guard since the early days of Silicon Valley to now. And obviously now, in terms of AI, some of these deep technologies, these other things that are becoming also very much national security and other conversations as well. Now that's come back into style, but very few people are actually specialized in it and know how to get these kinds of ventures off the ground.
That makes absolute sense. And let's stay in that kind of vein of deep tech, this specific niche that you and your partners find yourself in the VC space. What kind of a business, you've kind of gone at it from the investor's point of view, but from a founder's point of view, if they're thinking about funding, what kind of business is right for a VC firm like yours that specifically looks at deep tech versus looking somewhere else, maybe a more traditional route?
Yeah, so a lot of the people who come to the space don't tend to just be brainstorming for ideas. A lot of the people we fund do tend to be like postdocs and people who've worked on this as their research for, a decade or something of their life. And they want to commercialize it. They want to get it out to the world and everything. So It tends not to just be people brainstorming stuff, but if you wanted to, say, join one of these companies and help bring it in terms of commercialization and out to market, I think one of the big challenges on thinking about deep tech in particular is all the technologies tend to be fairly general. Like, think about the internet, think about AI, quote unquote, and these other things. You can kind of do anything with them. The big question is, what is your key market to start with? And how do you actually get out there? And do you have an ability to reach some of those customers and really get out there in a good way at the beginning and show traction? Because that's one of the hardest things within deep tech. It's like a lot of the not just investors, but a lot of customers are not willing to take that risk until the thing is proven out. But by the time the thing is proven out, you've already kind of gotten pretty far down the road in terms of the game. So how do you deal with that kind of chicken and egg problem? And having a startup, having a area that can get you kickstarted on that, either it's a really burning problem for a very specific industry that and have ins with, or it's something where, okay, I know I can get this kind of research financing, this kind of other stuff early on. Like, you need some of that mixed in order to get these kinds of businesses off the ground.
Yep, that makes total sense. That would be, man, that's intimidating as an investor. You got these people coming in who just know their space very, very well, and they're coming in, pitching it, and being able to evaluate that. And we'll get to that in a second about evaluating founders, startups, and how you do that well. But before we even move there, let me get your thoughts on when you said you were dragged into this space a bit. You were like, okay, let's do this. Like, it just kind of happened. But you probably had some assumptions about the VC space before you even got started. What were some misassumptions that you had? I'm trying to kind of break down that wall for founders in particular who might have that same sort of set of misassumptions before they go for funding themselves. What were some of those, and how did you kind of come to learn differently?
I came to it from a weird place. So there are two answers to this, I'd say. The first one is coming from, hedge fund world, Bridgewater, like thinking about things systematically and whatnot. It's like VCs kind of seem to fly by the seat of their pants. Like, I remember some of the folks from Charles River were like going like, yeah, it's all intuition based. And it's like, in most industries, you would say that that's not a good thing. It's like, how do you make like key decisions for your firm? I just go with my gut. It's like, since George W. Bush era, it's like that hasn't been in vogue. But, one thing that I realized over time, even though I don't think I've moved all the way to the other side, is why do VCs so much harp on it's all about the team? Because a part of, especially with software investing, but with everything, it's like when things go wrong, you kind of only can rely on the team at the end. It's like some market assumption was wrong, something goes wrong with the business, some key customer pulls out. It's like, what is the ultimate fallback at the end of the day? Well, it's the team. I mean, it's especially the case with a software business where you can practically pivot over a weekend and, essentially redo some of the stuff, relaunch the Google AdWords or whatever, go after a new market. But even in terms of other startups, it's like that ability to be adaptable really does fall to the team. So one of my misapprehensions on the investor side a little bit still is like, okay, why do you do it this way? Why do you think so little about everything except the team? It's like, okay, that's why. The other thing, though, like after having become a founder and hanging around in, the YC, Stanford, it's these kinds of networks of like startup founders, is that people seem to think that investors are really Machiavellian, and it's like, okay, they're going to find some way to screw you out of your equity. You need to like keep them at arm's length in terms of this way and this and that. And, the reality is like, once you actually look at it, it's like, no, not really. Like, most investors are actually kind of laissez-faire. I actually wish they were much more involved for most cases, because some of them can add a lot of value. They just don't, especially with large portfolios. They are not going to be looking to try to screw you out of your equity, do these things. They're not going to try to be Machiavellian or whatnot. They might be wrong in terms of some of their advice, but the kind of adversarial relationship that I think some like accelerators and communities like YC typically kind of cultivate is very much wrong. Not because it's like, okay, incentives might or might not be aligned, but just the actual mood and the way that people operate is just not that way. It's like you're more likely to get killed off in terms of some of these like VCs by neglect than you are by like some sort of malice.
That's really good insight. Let's talk a little bit more about kind of once the founder is in front of you as an investor, and you are evaluating them, what are some key things, key elements that you're looking for before your firm gets involved and starts investing? I think the key question I'm after here is, what do founders that get funded do differently from founders that don't?
I'd say there's a couple of things that go into this. One is you really need to have good insight on like what sort of hypotheses you have to sell. You need to be able to communicate that clearly, because if you don't have that clarity of thought just talking about it with me, you're not going to have that clarity of thought most likely talking about it with customers and trying to get them to like jump over some sort of big hurdle to try your product or to even just do a pilot, essentially, which is often the case for ours. It's like they're not usually signing big contracts, they're just doing pilots and whatnot. So that's a big part of it. And the other thing too is just like getting some sense of their willingness to like push and run through walls for this thing. But I'd say, at least for me, on the team side, because a lot of our stuff does tend to have to look at the technology, but that willingness to, that ability to have clarity of thought, that ability to have grit, and then sort of the baseline, like I can tell that you're being honest about a lot of stuff, is generally like kind of the three elements I'm looking for this kind of thing. And I know for a lot of people, it's like, it's some aspect of these, even if it's not quite as distinct. But that's kind of what you're trying to find. And that there's also pitches as well, which get into some of that clarity of thought, but I think we might want to get into that later too.
Yeah. No. Let's talk a little bit about those things like grit was one word you used. You said a couple things that are pretty intangible, right? Like that would be, you said it earlier. It's like when you're especially managing other people's money, but like when you are making such big and critical decisions, it would make more sense to stick with metrics. But as you said, one of your misassumptions was like, why don't you do that more? And why do you go with your gut so much? And like, but that is a big part of it, is like these intangible factors that teams or founders bring to the table. You did say something a little bit more objective of like their ability to articulate the vision and the product and the solution, which makes total sense. But these things like grit, I mean, these more intangible things, how are you evaluating those? How are you in 2 to 4 to 5 minutes, like evaluating that and getting an understanding of if they have that?
I mean, this is why, YC has traditionally had, for example, that question about, how have you like hacked some of these systems? How have you done these things? Almost like college essay like or whatever. A lot of them are trying to assess that. In a pitch, for example, it's like one of the best things that you can probably do is talk about a case where it's like you made an error. You assumed something wrong, and then this is how you figured it out. These kinds of things are actually super useful. You shouldn't try to like make yourself out to be perfect and never having gone wrong, because it never works that way. So having some of those stories, like us, like I often do ask pretty directly. It's like, hey, tell me about, a case for when you were talking about some of these like potential customers, pilots, whatever. It's like, what's something that went wrong, and what's something that you thought about that, didn't turn out to be the case, and how did you handle it? There's other cases where there's personal stories from founders where it gets to give some understanding of that. And from a more objective case, there is like before investment, we do reference checks and whatnot. So you do explicitly ask about that, but that's obviously pretty far down the road after you're like mostly done.
As you're doing that evaluation, I mean, what are some of the red flags that you're looking for from either a founder, founding team, or the product business itself that you're looking for that would really, raise that indicator of like, we need to look closer here, dig deeper?
I'd say most things are like yellow flags, just because a lot of stuff like comes up. I'm pretty forgiving about all sorts of things in terms of pitches. Like people are often pretty terrible at it. You kind of need to like, well, also you do need to sell yourself. So I do get a little bit of like exaggeration or whatnot. But if there's like more serious flags for honesty and things like that, that's pretty much the unforgivable like red flag thing. So, I mean, I know a lot of people talk about it, but also a lot of people talk about like trying to elaborate on pitches or whatever. But just straight up like dishonesty is a killer, I know, for most VCs, because you really are putting a lot of trust in the founder. You are, at the end of the day, kind of betting on the founder. So if that basis isn't there, nothing else can be built on it.
Totally. And especially people that are coming in and pitching to groups like yours that are more specialized, that are more in a specific space, like you're going to be able to see right through it. Like it's just for someone to be able to come in and maybe even like exaggerate market statistics, for example, like market data. You're like, I know this market, and that's not the case. And I can imagine that would be a very serious red flag. As we talk about pitching, what may be the most common mistake, or just a very common mistake that you see people founders making as they come and pitch their solution to you?
Yes, this one crosses all industries, including, because I also do some guest lecturing often at Berkeley, like invited by a few different folks or whatever. And it's like, you see this all the time. People spend way too much time on the problem and the product, but mostly the problem. It's like, if you have clearly articulated what the problem is, we're done, we're good. Like, unless this is a thing that is really, really hard to get, and that's whatever it is, which is mostly not the case, just move on. Like, there's no reason to harp on it. And really what I want to get into is like, how are you distinct, in terms of being able to do this? How do you have some sort of barrier to entry? And also, how do you make money and get distribution and get to customers and things like that? Those are all things that you should be spending the majority of the time on, because it's the thing that distinguishes you too. Every single other startup that's going after your problem also is going after your problem. You don't need to explain this to the nth degree to me. I'd like to know about your startup. So that, from less experienced founders to more experienced founders, I tend to see that actually come up again and again. People just get obsessed over talking about that.
That is super interesting, because I've heard quite a bit of the opposite, of that people say that founders tend to skip right past the problem because they're so obsessed with their solution. Like, they build, they live and breathe this thing, and then they don't accurately portray that a problem is even a problem. Like, they're like, yeah, it is a problem, trust me. Like, here's the solution I built. And investors have a tough time being like, wait, how do I even know it's a problem that needs to be solved? You're saying when people come and pitch to you, or I'm not trying to put words in your mouth, but I think you're saying that people are pitching to you generally in a space that you understand those problems. Like, those are pretty known. And so you want to know more about how they're differentiating themselves from other solutions.
So remember I said at the beginning, both problem and product. Like, I said it, product almost as like a secondary, but they often merge together, right?
Yeah.
Because oftentimes when you're talking about the product, you're implicitly talking about what your problem is. The thing that I really, again, want to know is, how are you different? Like, how do you get to customers? How do you make money? All of these other things on the back end that don't really have to do with either. Right. Yeah, like, if it's really not clear, like, exactly what's your problem, like, if you have a super, super niche problem, okay, though that might also raise questions in terms of market size too, which is not necessarily a good thing either. But you should have gotten your pitch to be honed to such a degree and like clear to such a degree that one sentence essentially gets your problem done. And then we can talk about, like, this is how it can make money. And yeah, we can talk about then with this model, how big the market size is and stuff like that. And that gets to like some of the aspects of like, how do I know this is a problem? It's like, okay, I described it to you, but also look at the model that I have for this and how much money it can make. That already tells you, okay, that's the problem. And that's also the most important thing in terms of trying to run a business.
Yeah, that makes total sense, that often it's implicitly discussed when you're talking about the actual product and solution itself. Is there a specific example that you can recall where a company just knocked it out of the park, something that maybe you go back to consistently when saying, here's how you can do it right? How did that founder or founding team do it differently that stands out in your mind?
Yeah, I mean, there's one example that I always really like because it was the biggest differential I've ever seen in terms of like a pitch thing on the problem. And actually, this gets to the entire problem thing, right?
Yeah.
This company is a battery membrane separator company, which for listeners, they don't really need to fully understand what that is, but whatever. It's like a thing, super technical product, really important for like EVs and other stuff. But it's for a lot of different industries. You can make things like lighter, you can make it cheaper, you can make it like last longer, you can do blah, blah, blah. In terms of batteries, there's consumer electron. All of this different stuff. Let's talk about the technicals of it, the polymer, the ceramics, the et cetera. It's like, you probably didn't follow almost any of that. It's just like, it's just a bunch of jumble of words. And that is kind of the pitch, right? It's like, okay, it's a super technical area. How do I even get across that this is important or whatever it is? And it's just like that, this particular founder for their, I think it was the Series A or something like that, basically like changed it around after like getting a lot of this feedback. And the first slide is just a picture of a Tesla. And it's like, there's this many EVs that are going to be on the road and all of them will need our product. Okay. Do I believe you or not? Hard to say, but at least you've got my attention, right? Again, like the problem is clear at that point. It's like, okay, EVs need this thing. Do I believe you or not? Like, we're going to get into that, but it's just like that already kind of hooks you. And then being able to say that, yes, like for these cars and things, their biggest cost is the battery. And we basically make the batteries last substantially longer in terms of lifetime.
Interesting.
Done. Yeah. Like, don't talk about polymers, don't talk about ceramics, don't talk about blah. It's just like, we're done.
I've definitely heard before that, like, from investors' perspective of like when you see the glaze over on investors, like you've lost it. Like it's really hard to get that back. And so to get it, and I've attended pitch days and stuff, and the pitches that do best and get the most engagement in the Q&A after and all that is people that get that attention right away. They're like, because everybody's distracted. Everybody, in pitch days anyways, not the panel, but like people just there, they're distracted. They're maybe doing something else, multitasking. And then even if they do it right, the whole audience is like locked in and from the get. And that's people who generally do better because you can keep that attention then.
I'll just say, because I get pushback on this sometimes too. It's just like, some people tell me, it's like, no, I get the feedback from investors that I'm not explaining this deeply enough and it's just too high level and too. Yeah, but the thing is, the investor is giving you that feedback and engaging more deeply. If you go the other way around, it's just like, and they don't even complain to you, and it's just like, whatever. That's a worse problem to have. You have to hook them first before you can actually move on. And if they complain to you, so be it. You've gotten to the second meeting, so who cares?
Really good point. Really good point. That segues me right into my next question. That you do often hear that goal, that first pitch, is not to get funded. You're not up there to like, all right, take my money. You're trying to get that second meeting. And so what advice would you have for founders to help them get that second meeting, that opportunity to kind of share in more detail, break it down a little bit further?
Yeah, I think it's that hook concept, right? It's like you're trying to hook them on this is important, and I have a way of doing this in a different way that's differentiated and can make money and things like that. That's all you need. And I would say that one of the problems that typically a lot of founders have is they try to stick too much in the first meeting. It's like we're not trying to go top to bottom on every single detail. You might lose the investor. It's the typical sort of paradox where if you say more, it actually might weaken your argument.
Yeah, right.
Because it's just like
stop
you're
talking,
getting
stop
lost.
Talking, yeah.
Stop talking. You're done. And I find, and this is also a thing where I sometimes see founders talk themselves out of a second meeting. It's just like once you're secured, you're done. Like just either stop or talk about personal stuff, or if you still want to talk about the company, talk about anecdotes that are kind of fun or whatever. You've succeeded. You don't need to like, you basically don't need to like, again, talk yourself out of a second meeting. They might need to both mull on it, do more research, pull in someone else in the firm in terms of other partners and things. So there's no way you can move the ball any further now. So no need to like potentially fumble it.
Nope, that makes total sense. Really good perspective. So I want to kind of get into this moment of, okay, they've got the hook in, you're interested, maybe they have a second meeting, you guys have even decided to invest in this company and these founders. What I think one thing for founders that is intimidating, or I'll speak for myself, it's something that's intimidating for me as I think about VC in particular, is once that train is rolling, like you're funded and there's this whole slew of, you hear so much. You hear a lot of horror stories around this idea of I start getting these milestones in front of me and it drives everything. There's this laser focus on these milestones. And it can set direction for the company and that you disagree with or whatever. There's just a lot of hesitation I know around that. And so break some of that down for me. Like, what are you looking for to help founders feel more comfortable with like, no, once you get investment, you can actually, it doesn't have to be scary. What kind of milestones are you looking for a company to achieve and on what timeline? How long? A big one I know is profitability. How long until you expect that? Things like that.
Yeah, I mean, for us, like profitability is obviously a hard one just given the nature of the companies. For you guys. But I think just in general too, it's just like there is actually a thing that I will say in terms of it being scary, other things. It's like you should probably have a business that you expect to be able to hit some sort of thing where you can reasonably think, I can sell this for like, maybe not $1 billion exit or something, but it's like super valuable in like 3 to 5 years. If you either have a very vague sense of that, or you don't know that, or you might need a lot of time to sort of iterate or other things, VC might not be the right path. Like some investors are like pre-seed investors or other things and are super patient, in which case you won't get on that train. Like they're kind of taking a bet on you as a founder, and you kind of can play around and see. But if you really are getting investment from a fund or a firm that has expectations in terms of this, you're kind of almost making a deal where it's like, I think because equity makes it confusing for people. Think about it as like a loan, right? Like taking a high interest loan. It's like, is it always terrible? It's like from a personal finance perspective, everyone says, yes, it's bad. But maybe not from a business, right? Like taking a super high interest loan to say, get your inventory in that you're going to turn over really fast. That's a really good choice, right? Because you know what you're using that money for and what you're going for. Now for VC, it's like if it succeeds or fails, like there's a lot of time for VC that more so than a loan, it's the thing is going to fail because it's inherently, challenging and whatnot. But you're kind of entering into that deal to some degree where it's like you're taking money that essentially is very high interest. And that expectation is we're going to turn that around and use that to grow or do these things a lot. And if that's not what you want to do, then there's no shame in saying it. And I've said it to a lot of founders. It's like, you shouldn't take VC financing at this point. You should kind of stay back and take your time, especially if personal circumstances allow you to do that, and figure out your product market fit, do more experiments, do these other things, so that when you do take the, again, super high interest loan, quote unquote, that is completely worth it, and you know exactly where you're putting that money. And I think with a lot of the sexiness around getting VC financing, doing these other things, and it's money, people forget that aspect, and it's that misalignment essentially, where you wouldn't think about that if you took, again, a high interest loan to basically go party. You would know that that's a bad idea, right?
Let's talk a little bit more about this deep tech space. You are maybe this is an applicable question, and maybe it's not, but I think there can be some insight to be gained here of how you are doing your due diligence to specifically weed out companies that are building these foundational technologies that will change industries and are setting the course for other businesses to really innovate and build things on, versus other companies that are kind of innovating, maybe riding coattails of other innovations and not building true foundational technology, but building on the back of other things. Is that something you see people pitching to you and you're like, nah, this is not the right fit for us? How are you weeding that out?
Yeah, I mean, that's an interesting way of like describing it, because to a certain degree, riding on coattails is fine, so long as it's just like, it's like, was Apple, like the typical complaint everyone has is like Apple announces something and suddenly it's like the most brilliant thing in the world or whatever it is, when like everyone, like Android has had this forever. It's like, it's not the first person to do it. It's the first person to get it right. Like even in this deep tech space, the typical thing I've said to a lot of these different founders from different labs or whatnot that come to pitch, it's like, just recognize you are almost certainly not the first one to have thought about this particular area. It's like whether it's like whether it's easy inspection in terms of like gas pipes or other things, or non-invasive like diagnostics or these other things. These broad areas everyone's tried to do things in. I know that your technology is a little bit different than everyone else's. That's why you got a PhD in it by definition, essentially. But you need to kind of think about like, why is it, what is it that makes it work now versus before? Because ideas kind of are a dime a dozen. It's like, even in the deep tech space, ideas are kind of a dime a dozen. It's just like, what is it that for my particular thing, me, for this particular industry, for this particular customer, whatever, that makes this distinct and able to succeed when everything else has failed? I think especially for first-time founders, that's a misapprehension, where it's just like, you always think that you might be the first one to have thought of this, and the reality is you definitely are not.
Definitely are not. Yeah, that's right. Yeah, it's so funny when somebody comes, Shark Tank or some as seen on TV, something, it's like, oh, I thought of that. I should. It's like, well, so did 100 other people, but like this person went and built it, and now they're like, I could have been a millionaire. It's like, no, So I'm super curious to know, because you've so much, just a breadth of experience in the AI space in particular. We're all hearing how it's going to transform everything. And I'm curious to get kind of your take on how that's going to be manifesting itself, just in the technology space in general. Like what are we going to start seeing? How will it be manifesting itself and actually making meaningful changes here in kind of the short midterm as things just so rapidly evolve?
Yeah, totally. And that's definitely an industry where everything that you say is like kind of dated in terms of like a couple of months and things change. But I think the thing to keep in mind is some of the fundamentals of this, right? It's like both from a business perspective and in what the technology can do. From a business perspective, everyone's talking about, open AI, some of these foundational models or whatever. But if you actually peel that back, at least right now, all the models are kind of commoditized next to each other. They don't actually have that much that are different from one another.
Right.
So if you actually peel back the business, like how do you actually make money? You're losing money right now. Your thing is expensive. You're putting a ton of investment in, but there are so many competitors that can instantly catch up to you, or at least catch up to you well enough that it's hard to have much pricing power in it. So
Right.
there's a lot of sexy AI businesses that are getting funded that don't really have a good path to ever getting there. That being said, from a social world, et cetera perspective, this is great, right? Like if you use some of these AI technologies and whatnot, it's like some of them work really well for certain aspects or whatever. But to put some both fears and maybe some of the wildest hopes to rest, it's like this AI stuff is not like fundamentally replacing humans anytime soon either. Like all of these things, like if you've done the academic work behind them or whatever, are fancy, bigger versions of like your linear regression that you learned in high school. LLMs are literally their mechanics are they are fancy autocompletes that you on an iPhone or whatever you can keep pressing and keep pressing the autocomplete thing and build
Yeah.
out sentences.
Yeah.
That is literally what LLMs are
Yeah, it's
doing under the
interesting
hood.
what you
Like
say.
ultimately, you cannot expect it to do the true creativity. You cannot expect it to adapt in deep, interesting ways outside of its training set or whatever. It can get really far, and that's the magic of like our current technology in AI and deep learning. But you can't get that far. Like the thing is, it's like mostly still augmenting people. One of the sayings that I've had so far is like, what you need for most AI technologies is an oracle. And that is borrowing for me like from cryptography, where it's like you use an oracle to basically like test whether or not like a password is correct or something like that. You get information back. AI works the best currently when it has an expert human being able
Right.
to check whether or not
Right.
the thing it's doing is correct or not. If I have, say, like ChatGPT, like write a script for a podcast like this for me, if I am a novice podcaster who has no idea what I'm doing, I can look at it and go, that seems okay. But for an experienced podcaster, say like for you, you like look at it and go, yeah, I mean, that's pretty good. Like most of the like basic stuff is all filled in, but I need to change this stuff up. This flow would be better here. It can save you a lot of time and be really good, but that's because you know what you're doing. It's not a replacement for a person knowing what that person is doing. So anyway, it's some of the perspectives in there. It's some of the fears. It's some of these other things. Our society, I think, will get changed a lot because you won't need some of these like basic tasks as much, but that's always happened. And one of the fun historical examples I have is that there are no more computers. And what I mean by computers is there used to be a profession in the 1920s, 30s, 40s, et cetera, called computers, where it's literally people
Interesting.
doing calculations. By the 1950s, no one was a computer anymore. But that didn't mean that people in STEM like areas were suddenly all out of jobs, right? It's like the nature of things evolved. These tools actually made the people even more valuable. And that's what we're probably going to see as we go along with these technologies.
And I think it's the computers people that figured out how to use the computer machines to use their skill sets and knowledge to augment and be better. That did keep their jobs and they were better at their jobs. It's the other people, computers people, that were like, oh my gosh, I just need to find something else entirely. And it weeded those out. And I think that's going to happen too. I mean, I'm sure you've heard it too. I've heard AI explained as like a IA, intelligence amplifier, right? Like how do you use it to amplify your intelligence? And the people that figure that out will transcend all this. And then the other ones who are just like, oh, I was a copywriter and now I'm out of a job, they get weeded out. But isn't as you say, like, yeah, it's essentially like a fancy autocomplete, but like, isn't that actively what's being worked on getting past? Like, aren't we actively trying to get these things to the point where there's like novel, creative, sentient thinking almost? I'm not saying like a being, but like, yeah, like autonomous thinking. Aren't we like really close to that?
We've been really close to having excellent gene therapy since the 1990s. We've been really close to quantum computing for a long time. And we were close to AI that could replace people since the 1960s in terms of it. So it's just like the problem with all of these is they're R&D problems. We don't actually have a roadmap to getting to essentially what you're saying is AGI, artificial general intelligence. It's like something that can think and work. And maybe it's not amazing or whatever, but it can do the kinds of things that humans can do essentially, and adapting to new situations, learning these things. We don't have a good roadmap to getting there because right now, again, like these things are fancy autocompletes, and anyone who's kind of says otherwise is hoping, right? Like, because to be frank, a fancy autocomplete that can follow your instructions and do some of these things, that's pretty amazing.
Oh,
like
totally.
if I were to if I were
Right.
to just tell you like 10 years ago that one of these language models, which I actually had worked on some language models and other things, it's like if I had told you that these things could suddenly follow instructions, do these super detailed things or whatever, I'd be like, BS, like it can't do that or whatever. But if you pushed me and went theoretically, like just from a, like, I don't know, get it big enough, get it like fancy enough computer, whatever, could you have it kind of do this? The answer would be, yeah, I mean, theoretically it could, I guess, because technically speaking, it's like if it has a large enough data sets, follows along with every single Stack Overflow post, whatever, it can probably code, like put together code and other things. So it's possible. But can it think and adapt
There's
and
no
do
path to
these
that.
things? There's no path to that because there's no way that it can break out of that training set thing because by mechanics, what it's doing is it's taking the gist of all these things that it's ingested and throwing stuff out that that is the highest probability. But by the way, that's another thing that people should keep in mind. These things actually don't have any knowledge underneath them. Like the systems in the 1980s were purely based on knowledge. And why I talked about that oracle's idea or whatever and humans checking it is because this thing is an excellent plausibility. I talked to someone recently for an interview where it's like Alejandro Morphus, who's a professor at the University of Havana that works on some of these LLMs and things. They're plausibility machines. They're not correctness machines. They're excellent at making things sound right. That's actually a terrible, in a way, that's actually a terrible characteristic for someone who's a novice using these things because you think that it's right, but it's not. And that's what's gotten lawyers, for example, in trouble, right? There's no fundamental concept behind these that you can double check. It's like, oh, it's this court case. That sounds like it's really correct. And then they submit it to court and the court goes, that's not a real court case. How did you get it?
Yeah, that's not actual precedent. Yeah.
Yeah.
Yeah, that's super interesting. Thanks for obliging me. I was so curious because you just had such a depth of knowledge here and things are changing so fast. And you said, yeah, things are quickly out of date. It's April 2025 and who knows where we're headed, but like that's where things stand right now. Yeah. So let's pivot back to kind of, founders and your perspective as an investor. What's a word of caution? So we've walked all the way through of a founder making sure that the founding team making sure they're pitching correct, articulating both their problem and their solution. You guys step in and decide to invest, and as founders are actively scaling their company. They're growing. They have funding and they're rocking and rolling. I mean, what are some words of caution you can provide to founders at that very tenuous moment that can kind of make or break success or failure in a startup?
Yeah, I think there's a couple of them. One that I typically see, especially after you get funding, is you should hire slow and fire fast because I know one of the things that people typically do is like suddenly it's like, I just don't have enough time. There's too many things I'm doing or whatever. And my typical thing is you kind of should wait for some of these problems to be screaming before you bring in certain people because size is not a good thing. Like it makes the culture of the company harder to maintain. It's harder to coordinate. You end up like having a lot of different issues that come with size. Size is a bad thing It's just a cost that you're willing to incur if the business is at a size that you need it. It is not a good thing inherently, though, and you should not overhire at the beginning. And if you end up hiring wrong, you should probably fire fast. Because what I've also seen is companies end up crumbling within themselves because they hired a bunch of people who they probably shouldn't have. A lot of the people who work really hard or are A players or whatever get resentful and decide to leave or other things. And it's kind of like a sore that kind of grows, especially with a startup where people are working really hard and working really closely together. The typical pushback I get there is like, but they're doing so much work. Like if they aren't there, then so much of the work will have to be taken on by someone else. Yeah, but it would have been the same thing if the person just gave their 2 weeks notice as well, right? Like you have to figure these things out. Like it's always going to happen. And it's better to actually like tear off the Band-Aid in terms of it. I guess the other thing too is just similar with like getting a lot of money and other things. It's like try to like it's hard to, but you really should be thinking about, again, what is the best marginal use for every dollar in terms of it? Because the moment after you get a financing round is always the time you feel the most flush. And that's usually the time you have to be really disciplined about how you're actually spending that. Don't spend that on growth, spend that on being able to get to your milestones faster. And if you are hiring, then hire for that, et cetera, blah, blah, blah. But again, make sure that it's actually the best use of it. But also, don't just hoard the money, because one thing that you can also overspend on, quote unquote, and get addicted to is time, which is also deadly for a startup. It's like I've seen also other people take the advice in the other extreme and basically hoard the cash so that they have an infinite runway or whatever. And that's bad, honestly. Like, if you're trying to make a lifestyle business, that's fine in terms of it. You probably should have like tried to like grow internally and whatnot, and not have those expectations. If it is what it is and it becomes that, that's fine. But if you hoard time too much, like inevitably in startups, things change. You lose your window. Like competitors catch up to you, other things. It's like time is also something that you should not hoard because as a startup, you just don't have it.
Yeah, no, that makes total sense and really good advice. Now you said earlier that you should never be afraid to share what your failures are, because that's where the learnings are. So I'm going to ask you, what's a failed investment that you made that kind of still stings? What did you ultimately learn from it?
So, I mean, one that still very much stings just because it's like, there's plenty of things that you can look at. It's just like, it was bad luck. It was this, it was that. It's like, it's fine. This one stings both because it's a LiDAR company that has like very, very low cost LiDAR. If it had gotten out to market, it's probably still the best technology I've seen out there, including like everything years later. We'd probably have way safer normal vehicles. We'd probably have better stuff in terms of autonomous vehicles at this point. It got acquired by another competitor because they had spent too much time going after the wrong markets, hoarding some of the time and money to some degree for a bit, like going after robotics markets, other things, not really stepping into the automotive market. And then also everyone else outraised them because this was during the SPAC period where basically every single one of their LiDAR competitors like SPAC'd for over $1 billion or something like that. So they ended up having a ton of their engineers all hired away. It's just like, we'll pay you 3x, what you're getting at this company. It's like, well, you come to us. It's like, yes. And then they basically get poached away. So eventually they just had to go to this other company. And then in the meantime, because the other company wasn't particularly good, we watched as during our lockup period after, they exited to this company, we got a lot of this other company's stock. The stock dropped by like 90% or something like that over that time period. But the lesson here, though, is like I talk about all these different things, but there's different failures here, right? Like one of the failures here is like going after the wrong market for too long, et cetera. You might be surviving, but again, you're whittling away time. Like that is actually something where, again, all the competitors, they had worse products. They had all these other things. Again, another lesson. It's like the best product doesn't always win. It's like you whittled away that time. They raised way more money than you did. And then basically, again, just hired away all your engineers and whatnot, which, again, another sort of lesson there. It's like momentum, being able to get money, et cetera. That is also a value in and of itself in being able to keep progressing. It's like all of these things put together, it's like, I think, show you like a lot of the different aspects of this, where the thing that you always want to go for is growth, progression, momentum. Like that is the thing that you need for a startup. It's not being able to last forever in terms of like on your financing round. If you actually have great momentum, that'll make your financing rounds easier, not harder, even if you spent all of it like fairly fast. But it's also like, you just do not have the luxury of like futzing around with these things, even if it feels safe at the time, because eventually it goes from safe to unsafe because of competitors, because of being outraised, whatever it is. So that's kind of the watchword. Always keep pushing the growth. And this, by the way, goes back to the thing that you asked about. It's like, well, how do founders feel comfortable after they take VC financing, whatever? I'm not saying that you should feel comfortable in terms of that. Not because like the VCs are going to be evil and like come down on you or whatever, but it's like you have it's almost like a video game level timer. You don't see it. But one of the reasons why, and I don't think a lot of VCs articulate this well, one of the reasons why they're pushing in terms of this is they've seen this level timer run out.
Right.
You need to get going. If you don't want to, and you want a different type of business, that's why you shouldn't take VC financing, because it is a level timer. You have stepped into the game. And if you don't win, you kind of die in terms of this because of the way that the market dynamic works. That's why you need to really push the growth part.
When you speak with other entrepreneurs, what's a question that you tend to get the most? And then what question are they not asking you, but they should be?
I think, especially for like early entrepreneurs or whatever, the usual thing is like, how do I raise money? What's kind of the tips and tricks and other things or whatever? And the thing that they don't usually ask is like, how do I set things up so I can like have the milestones to get the money? It sounds kind of the same, but it's not quite, right? Like, because one is like, how do I get tips and tricks to go pitch better or whatever? And the other one is like, what sequencing do I need to do in terms of showing momentum and how to show the momentum in achievable ways that, chunk it up? Because there is some path dependency. You can't go from 0 to, $1 billion in revenue overnight. But what's like the most impactful thing that I can show that will tell people, this is actually going really well. This is a really good business. That's why you should invest or whatever. And we have a ton of momentum. And once we have this, we'll be able to get to this milestone, which then shows a ton of momentum and get to this milestone. It's not asking about the like kind of stair step that you need to get to that end goal. Because I think a lot of entrepreneurs, especially starting out, don't know that there's a stair step. You don't need to go from 0 to $1 billion overnight. No one is actually expecting you to do that. It'd be great and all, but that's not realistic. The question is like, what things can you pull out to really de-risk and show momentum in this business? And that's a brainstorming process, because a VC cannot tell you that. That's actually another mistake. Right. Even if you ask about it, you're trying to expect that the VC is able to give you the things directly. Right. You know your business. The VC doesn't. The VC also doesn't know you. Like, not necessarily. It's like, you know the kinds of things that you can achieve. If you are the one person who can get this big pilot with this big, well-known Fortune 500 company, because that, even that person's been your mentor at church or something for like years, that's not something that the VC would be able to suggest, right? It's just like,
totally.
Figuring out that stair step, trying it out, thinking about it, brainstorming. Like, that's the thing that people should be doing, not asking about tips and tricks to raise money.
Setting up the foundation the right way. Getting things in place. So imagine, James, that you woke up at the beginning of your career, somehow retained all the knowledge and experience that you have now, but you're at the start. How do you kind of spend that first week of that fresh start?
I mean, so one of the benefits that I've had, I think I've been in a lot of high leverage positions, in the sense that, like, for example, at Bridgewater, it's like, if I did walk into that at that point, it's not like, okay, now I'll, whatever it is. It's like, I'm not stuck in terms of like a ceiling based on seniority level. And I'm also not like done in terms of I've learned everything I need to learn. I would basically go out there and just be able to hit a far higher level, far faster, if that actually happened. I think for younger folks, and just sort of rewinding back, like for me and for others, For younger folks, especially who have less responsibilities, because yeah, to be totally honest, like family, kids, it does change things, right? Like unless you want to be like an absent parent that like is never there or whatever.
Unless you strive to be an absent parent, yeah.
Yeah, it does change things.
Yeah,
So
totally.
if you're younger at the start of your career and whatnot, I see too many people. And again, I had the benefit of almost falling into this kind of high leverage, high risk path or whatever. But I see too many young people go like, I want this thing because it's kind of stable and it's a good resume builder and it gives me good optionality. Like that's the ultimate like sell for why everyone likes to go into consulting, right? It's like great optionality or whatever. That's not the way that you should try to do things when you're younger. You have the time, the space, the forgiveness. No one's going to care really, like to fail over and over and over again and do crazy things. And I promise you the crazy things will be much more interesting and much more impactful in terms of setting you apart than the common things. Like how did I start my career? I actually was doing microfinance in West Africa. I was the guy they dropped in when it's like the local office or whatever hadn't been in contact for like 6 months. Sometimes it's because the SIM card ran out of data. Sometimes you had to get the people out of jail. That's a much more interesting story. That gave me many more lessons in terms of how to operate in business than if I had just taken a consulting role or something off the bat. And people find the story entertaining. Like that's ultimately the thing that I think I would do, but also I would suggest anyone who's sort of young at the beginning of their career do.
I love that perspective. I think you often hear, a very different perspective, especially in academia as you're in school. I certainly did. I certainly heard go somewhere with, good optionality, safe options. And some people that's the right move for. But I think in a lot of ways, people who have a disposition that something a little bit riskier, a little bit, more apt to fail, like who would have the likelihood for that to be the right path for them, I think are often scared out of that. And I really like that advice. I think that's good. So one last question here for you. What's one tool or quote or book that you have found indispensable, either in your personal or professional progress?
I think gratitude journals, to be totally honest. It's like mental health is a important thing. It's the thing that lets you keep getting up and going. Like for a lot of sports and whatever, and I road crew, it's all a mental game, right? Like really, who's the team that wins in terms of rowing regattas? It's the one that's willing to take the most pain or whatever. Why are you willing to take the most pain? Because it's something mentally in terms of I want to do it for the team. I want to do it for whatever. Doing a lot of hard things, taking a hard path. You get imposter syndrome, you get all sorts of things. And I find at least like being willing to sit down and go like, what are all the good things that have happened? What are all the et cetera? Like, what's the things I should be grateful for? It helps center you a lot. And it helps you basically have the energy to basically go out there and compete on the field again. And without that, I would say that it's very hard to just like tough it out and just go and run or whatnot. Like that sort of thing and that kind of reflection, I think is super useful and important.
I love that. I love that perspective. I think that often, the answer to that question I ask at every interview and is often, very geared towards professional. And I love hearing like, it's important that you are grateful and that you're journaling that and looking back on that. I think that's really good. It shows a lot of wisdom for sure. Awesome. Well, James, this was super, super helpful. I have a ton of notes here. This is really insightful. I appreciate you coming on and sharing your perspective with us today, man.
Yeah, thanks so much. This was a fun conversation and look forward to more in the future.
Awesome. Thanks, James. Take care. If you guys enjoyed the show, leaving a review is the best way to help others find it. Second only to sharing it directly with your friends and family. Thanks so much for helping get the word out. Hit me up at brandon@readysetstartuppod.com if you have additional questions about a topic I covered, have suggestions about another area you'd like to see me dig into, or just want to say hi. Please reach out. I'd love to get in touch. Keep imagining, keep creating, keep inspiring your spheres of influence with what you're passionate about. The world may just need that dream that's in your head. See you next time.